welcome to Money Mindsets Matter. I'm Chad Craig, and remember, if money doesn't matter, then what's the matter? And if you're not preparing, you're not prepared. Listen, this is Season 2, Episode 10. And last episode, we looked at how this special asset that we've been talking about in Season 2 solves problems we all face, whether we were aware of them or not, but it provides a solution to all those problems. What an amazing asset, where $1 or the dollars you put in purchase the ability to accomplish multiple jobs or multiple objectives simultaneously at the same time. There is no other vehicle or place or option that solves all those problems we've talked about like the asset of a HECV, High Early Cash Value Life Insurance Contract with the mutual company that pays dividends. That's the power of that asset, all right? So if you didn't see that episode, I encourage you to go see it. If you've not subscribed, we appreciate you to subscribe, hit the like button. I want to thank those that's listening via podcast. I know it's summertime at the time of recording and the release of this, so people be traveling in the vehicles and flights in the air, and so I know a lot of people will be hearing this episode via podcast, and we thank you for listening as well. Well, in this episode, I want to pick up off of where we looked last episode, and we concluded with one of the problems that we all face that needs to be answered when we're aware of it is the need for OPM and other people's money, meaning our need, your need for capital is greater than your current access to it. So any way that we can get access to more capital than we ourselves have earned, okay, puts us in a place of advantage. It gives us more options, okay? And the asset of a specially designed dividend-paying whole life contract with the mutual company gives us that option, that the cash-on-cash return increases every year. The efficiency is very early on, where for every dollar you put in, you're getting access to more than a dollar to deploy, okay? And people oftentimes say, well, how can I use now the OPM, the cash, all right, the liquidity of my contract through the general pool of the mutual company? How can I take a loan against my cash value and deploy that money to go purchase other money or assets that produce more money? Well, the sky's the limit. This is why IBC, Nelson Nash, who created it, called it the infinite banking concept, meaning there's infinite ways. And based on the field, based on your life experience, based on your knowledge, gives imagination of how that cash can be deployed. To go find other cash, meaning to deploy the cash to go make more money and to bring more cash to you. That is, by very definition, an asset, right? Something that brings cash to you. Now, the first way that you can use the cash value an OPM, all right, could be to go purchase other guaranteed money. And what I mean by guaranteed money is you could expand your system, like we've talked about, your banking system. You could look into annuities. And with this, we mean lifetime income ones, where you have guaranteed a flow of money contractually, yearly, okay? These are options, okay? But outside of that, Guaranteed. One is real estate. Real estate. You can deploy that money to go purchase real estate. Now, right now, the filming of this, to go and get into single family rental homes is very difficult. It does not, the numbers does not, in majority of deals work right now. Meaning there will not be cash flow. If you go by the average, not even average, the majority of current deal options for single family rental home. Okay. Now you can get creative. You can do a lot of work. You can spend a lot of hours, and you can find that one nugget, that one deal that still has some cash flow, right? Beyond maintenance and beyond tax liabilities, beyond upkeep, beyond if you're gonna, use an institutional bank, mortgage lending, whatever. All right, but there's other forms of real estate. So it could be in buying land, and it could be a long-term plan, okay, of buying land. All right, you got an area that's in expansion. You got new interstate expansion, new major road development. You can look within 10, 15, 20-mile radius of that and buy some land and sit on it until that part becomes the hot spot for expansion. But real estate is an option, okay? Now, one of the things about the asset we've been talking about is because you have those contractual guarantees and you know your cost of capital, you have a guarantee to knowing your cost of capital, then you know what type of cash on cash or return you're needing when you deploy that money, okay? So everybody has a different risk tolerance. Some can use this cash value, and for two, Bitcoin. You would know when you deployed the OPM and used your cash value, you know contractually you're guaranteed rate to access liquidity and deploy that money, and what would need to be your yearly growth here, okay? Crypto or Bitcoin. Now, some people wouldn't do that because they don't want to use an asset that's built on guarantees to necessarily go and purchase very volatile, very risky type of assets or products. Some do. The power of the asset is it's getting the banking business and it's getting liquidity and the control of liquidity back into your hands, meaning it gives you more options, okay? As an investor, even as a business owner, it gives you more options. And that's the next thing. I'm going to speak up. Can be used for business needs. The powerful thing about a high early cash value life insurance contract, especially designed, right, with the mutual company, dividend paying, is it gives you so much options contractually, all right? Meaning you can begin to redirect the dividends, okay, to be sent to the business, and that money, the yearly dividend amount, could provide the yearly bonuses needed for your employees. You could use that in a sense of what's called golden handcuffs. When you hire, you could say, hey, if you stay with my business, if you stay as an employee 15 years or 10 years, at year 10, you're going to trigger an employee benefit. And every year after that you stay with the company, we're going to give you a guaranteed bonus. Well, how can a business owner do that? Well, because the asset comes with guarantees, okay? And we're using a company that has declared dividends every year. And one thing, remember, though dividends are not guaranteed, once a dividend is declared, it is forever then guaranteed, meaning that money can never come out of the contract. So once a dividend is declared, it's going to forever, at that point forward, continue to earn compounding, okay, growth on that dividend that's been declared, all right? So that gives you flexibility. The cash value, okay, can be utilized to take loan, right, and fund a new expansion. If you're going to do a new marketing push, all right? Or it could be used to hire that new employee that's needed. Obviously, if you go read, which I encourage you to read if you haven't, but if you go read Nelson's book, or Nelson Nash's book, Becoming Your Own Banker, you know, he was a forester and dealt with a lot of equipment and forester equipment and things like that. And so you can see how practical it is to use cash value in the OPM of the mutual company to go buy needed machinery or whatever types of equipment your business needs. So I have a client, potential client, he's in robotics. And so, you know, these machines are, you know, hundreds of thousands of dollars, right, for the business. Well, if you pay cash for those machines, you forever lose, one, access to that amount of money. Let's say it's $200,000. Two, you forever lose the future earnings that money could have earned, right? Because remember, don't fool yourself. We pay interest on everything we purchase, whether personally as a family or a business owner, by either paying interest to someone else's institution. It could be that equipment company financed it, or the bank that we took a loan from, third party, or we're giving up the interest we could have earned on that money. Paying cash is not doing you a favor. It's actually costing you more. And so how to prove it? Get out your iPhone, type in the internet, future value calculator. Some sites will come up, pick it, find the future value calculator, and let's say you buy something, a car, $50,000. Put $50,000 in there, and it will calculate, and then put the time frame in 10 years or 20 years, whatever. It will show you the future value of that $50,000 that you just paid cash. That's what you're actually losing. You're losing the cost of that capital to control it, and you're losing the interest that capital could have earned long term. So paying cash didn't save you, it made you lose, okay? But you can use it for business needs. Another thing is, a lot of small businesses, there's not to the point, or new startup businesses, where they can provide retirement plans, okay? Because remember, you can't offer some employees 401k or sponsored plans, okay? If you do that, you have to offer all right, all employees. So what companies do is, for high producing employees, is you can do what I talked about with the dividends that can become bonuses for certain employees, and that's legal, right? Another thing is the business owner or the business can put one of these high early cash value or just a life insurance policy contract on one of the employees, and in the agreement say, when you pass away, we're going to leave or give to your beneficiary, your estate, your family, okay, a certain portion of the death benefit. Could be all, it could be 50%, you know, it could be 20% or whatever. As a business owner, you're going to, if you don't give all to it, you're going to recapture, one, all the money you put into the policy on the person. Secondly, you're going to be a blessing to that person's lineage and legacy, okay? So these are flexibilities, all right? A lot of times a business owners say, well, I'm going to do an SBA loan. Now remember, The asset we're talking about, many call an and asset. Meaning, it's not that we're saying this is the only thing we should do. This whole episode is about how to deploy the value of the asset, the OPM of the mutual company, your part owner, to fund or purchase or buy, hopefully, other cash producing assets or other needs that we have for business. So the point is having the asset gives you more options. Because what if you can't secure an SBA loan? Well, the good news is you got cash value and you have guaranteed contractual, you know your cost of liquidity and capital and your access to money, guaranteed. See, we say things all the time as if they're guaranteed because we have been blessed to be currently in a bull run, okay? And we had came out of low interest rates. Well, interest rates aren't that low right now. So you find people who have only experienced and known easy access to money, find themselves struggling in their money mindset to find deals or know what to do because they're dealing with an environment that they're not used to. Okay? Like back in the 80s when interest rates and, skyrocket 18, 19, 20%, home mortgages, 18%, 17, 19%, right? So you have to see the whole scenario of possibilities, and this asset just gives you more options. But with an SBA loan, here I'll give you the reality of it. The 7A, the range is currently 9.75% to 14.75% on the variable rate. The variable rate. Well, the asset we're talking about destroys these rates. My system of policies for the rest of my life, the ones that are on me, I contractually have guarantee and know what my access of liquidity is at a fixed rate, and I also have variable option. And both of those destroys this rate. So here's the point. There might be times where it would work or an SBA loan would be needed for a business owner who had this. But the point is, think of how much peace of mind, liberty, opportunity, flexibility, freedom it gives you that when you have this asset, you know you have guaranteed access to liquidity and capital at way lower rates if need be. Guaranteed. That's the power. The fixed rate on this SBA 7A loan is 11.75% to 14.75%. Now, the variable, let's say if you got 12%, but you believe it's going to, 2x your productivity or increase your net profit in your company, well, that sounds like a decent deal. But let me tell you, what happens if things tighten more? What happens if the Fed tightens more? Their fear of inflation, and that balloons up to 28, 20. See, now you're dealing with variables that you can't control. This we have guarantees that we can control. So something to keep in mind when we're making decisions as business owners with business needs. Now, the SBA pretty sure it's 504 loan, which is for the real estate and the heavy machinery, okay? is at a fixed rate of 5 to 7%. Okay. So the point is that 7% is well higher than this asset. And the 5% is even higher than some of the guarantee that this asset gives for liquidity. All right? So things to keep in mind. Another point is this asset keeps the control in your hands of the terms. This is bringing in a third party with more variables that you cannot control. You can't control the terms. Loans can be called in. Variable rates can skyrocket. There's all kinds of issues with this. Can you even get the paperwork through and get the loan? Will it be granted to you? Okay? There's time cost to all that. Effort. This contractually you have guarantee. I recently took out large sums. It was around 48 hours, and that money was in my account. Okay? So this, of course, is process. This is unknowns. This is not guarantee. Things to keep in mind. All right? Next, cash value it solves the emergency fund. So people say, start getting emergency. Well, that solves it. If an emergency come up, you have guaranteed costs of liquidity. I'm going to move to black marker. Oh, that's number 4, sorry. Number 4, emergency fund. 5, how about debt pay down? Again, you know contractually your rate to access liquidity, and if you got higher rate debt, you can start attacking it and paying it down. Okay? 6, you have flexibility, and if you want, you can get a revolving line of credit. So if there's a credit union or a banker you're friends with in a bank, and you got that face-to-face relationship with, and some equity in that relationship of trust, you can get a revolving line of credit through that, because they'll collateralize, okay, the cash value of your product, all right, with the revolving line of credit. What about this? What about non-covered medical? You know, if you're a snowboarder, you know, if you're up north and you snowboard a lot, New York or Colorado, or maybe here at where I'm at, it's the lake life. People's at the lake, and you know, they get hurt, and it's something that falls outside of whatever your medical coverage is. Well, guess what? It's a way that cash value. You don't have to, in a sense, freak out, even though obviously a serious accident, you got access to capital to cover non-covered medical procedures and things like that. Here's another one. A lot of people use this as well because the asset gives you multiple options of how you can use it. And so it also provides answers, solves those problems we talked about in previous episodes, but also then can be used for education. So what about your children's college, your college, master's, doctorate, right? Going back to school. It can provide liquidity for education. How I got into it, I mean, I consider it a large purchase, is a purchase that everyone listening in America probably does and does fairly often. And that's large purchases. For me, I got started through vehicles when I realized cash mentality fails and crumbles in comparison to what we call a banking mentality. But large purchases, okay, renovations of the house, renovations for your business, renovations, and if you're doing real estate flipping, buying and flipping. All right, what about investing in personal growth? So you're going to go attend a conference, a mastermind. You're going to invest in your growth through signing up for some online course. Well, cash value takes care of that. What about this one? P2P lending, peer-to-peer lending, or private lending. Now, I would encourage you, and when that happens, obviously, you always, if it's going to be on real estate or something, you want to be in a first lien position. You want to put as many protections in place to guarantee and guard your money in that. But private lending, okay? This is a great service to people that you have access to liquidity and capital, they don't, and you can lend to them based on their needs, okay? So, this is just some ideas. This is how it can be used. But what are we talking about? We're talking about infinite banking concept. Remember, we defined banking in previous episodes. It's the lending, the receiving, the storing, the deploying of money. We're all in the banking business whether we realize it or not. You got to have the right money mindsets, the concepts about banking. It's a wise thing to do. Where do you, as we talked previous episode, if you're in the banking and you got cash coming in and going out, where do you store it? Is it got guaranteed growth? Does it have liquidity and access, uninterrupted, all that? But here's the infinite part, is this list can get infinite. Because as culture changes, as technology changes, as opportunity changes, as needs change, it's infinite how you can use the cash value. Another thing about the infinite is a lot of people, as I conclude this episode, you know, this is the symbol for infinite. And notice there's a flow to it. Because money's meant to move. That's why you have words like liquid, deploy, the capital. It's to move. It's the velocity of money. Okay? Our government depends on the velocity of money. Because the more $1 moves through the system, buying goods and services, the more that same dollar earns the government in interest. Okay? But what if you control the capital comes into your hands and you deploy it and you move? Well, now we're getting into, you want to talk about real rate of return? How can you determine the real rate of return on a high early cash value life insurance policy, dividend paying with the mutual company? Well, you can't. Once you start deploying it, it can become infinite. It's based on, yes, you know the guaranteed rate contractually of growth and interest and dividend rates that's declared every year by the companies that we use for 100 plus years. But once that money is deployed, and you got private lending and you got lending out of $50K at 15%, you invest in personal growth, use capital, and then started a new business, and that business is making first year $75K net profit. You've recaptured interest that normally would be lost to a third-party dealer when you buy a car. It's flowing back into your system. Debt pay down, you're recapturing lost interest. Real estate deal, your business is growing. The point is it becomes infinite to begin to calculate. It becomes infinite. So sometimes you hear that one person talk about that one deal they did, and that one real estate deal, and they, 4x'd, got 4 times the money they put in back, 400% profit, but that's one time. What you don't hear is that maybe it took them 5 deals to learn that, and they were already down a couple million. The point is with this, the rate of return can become infinite as you just begin to deploy money. All right? This is just showing you that just change one thing if you're already doing these things. And that's put the money first into a high early cash value life insurance contract with the mutual company. And we'll serve you and help you. And we'll get it done for you. Then do this. And your rate of return is going to be greater than if you just do it without the asset. That's why this word is here. That's why Nelson put it infinite. Can become a possible infinite rate of return. Well, this is episode 10. I'm Chad Craig, and this is Money Mindsets Matter. We'll see you next time. Like and subscribe if you haven't. Thanks for listening on podcast. Remember, if money doesn't matter, then what's the matter if you're not preparing? You're not prepared. God bless you.